Hey investors, been traveling a lot for work recently, but I just had to stop and make a quick video on some juicy dividend stocks. The stock market just experienced its worst week since C19 actually started. Now, a good investor knows this is actually the time to lock in some great starting yields at some bargain prices. I'm going to be sharing the 5 stocks that I just put $500 into. Let's get started. Stock number 1, been around since 1885, Prudential Financial. Prudential is a financial giant who offers insurance, retirement planning, investment management, and other products for both retail and institutional clients. The company has 1.7 trillion assets under management and 50 million customers in over 40 countries. Prudential is known for its rock-solid balance sheet with a AA rating. The company has a blistering PE ratio of just 7, and it is significantly lower than its 200-day moving average of 109. That means investors can now get the stock at a starting dividend yield of 5.25%. Not bad for a company that has also raised their dividend for the 14th straight year and now has a 10% 5-year CAGR. I currently own 13.1 shares of Prudential, and I get paid nearly $63 every year for just owning them. Stock number 2, the GOAT dividend stock, UNH. If we had a stock market draft, I know who I'm picking number 1. That's the healthcare giant UnitedHealth Group. This is a company that provides health insurance to over 75 million people globally. Health insurance is notoriously expensive. The industry is expected to grow to $3 trillion soon. Expect this company to continue to be able to raise those rates onto consumers and keep growing that bottom line. Notice how the first 2 stocks I picked are both insurance related. That's because even in times of a recession, people will prioritize paying their insurance over other discretionary items. Take a look at UNH's revenue growth over the past 10 years, going from $110 billion in 2011 to nearly $300 billion this past year. This is also reflected in their share price over the past decade, going up 24% every year compared to the S&P 500's 13% annualized. UNH may have just a 1.46% dividend yield, but that's quite deceptive as this company has aggressively raised their dividend. Their 5-year growth rate is nearly 20%. Imagine getting a 20% pay raise at your job every year. Furthermore, UNH only has a payout ratio of 30%. So I expect even more bigger dividend payments in the future. The company should definitely consider a stock split at $452 a share. I currently own 7.22 shares and I get paid $47.65 from them every year just for holding on to my shares. I'll just quickly go over the third stock I poured $100 into. Applied Materials, they pay out a small dividend yield, but I just had to buy this semiconductor equipment company. AMAT is trading considerably lower than its 200-day moving average of 132. With analysts thinking this stock could reach 155 in the next 12 months, I knew I needed to add it to my position and get that potential for 72% in upside. Stock number 4, a dividend aristocrat, Medtronic. Medtronic might seem like a stock that falls under the radar of investors, but that doesn't mean they don't make a significant impact in society. As a medical devices company, they develop healthcare products that can extend people's lives around the world. MDT has about 40,000 patents in their robust portfolio, and they spend nearly $3 billion in research and development costs every year to continue to expand that portfolio. Medtronic treats over 70 different healthcare conditions, so expect them to continue to be a safe and diversified company. The company has rewarded shareholders with 44 straight years of dividend increases. Now they have a starting yield of over 3%. And a low payout ratio of just 44%. I now own 14.13 shares of Medtronic for $38.45 in annual dividend income. Stock number 5 just got added to the S&P 500, Vici Properties. Vici closed their deal with MGM Growth Properties early this year, expanding an already impressive real estate portfolio. Some big news recently was that this company just got added to the S&P 500, which means a boost in share price because so many index funds will now just be pouring money into the company because they have to track the index. While rising interest rates and inflation certainly hurt real estate companies like Vici, which have set long-term contracts, they do have some rent escalation clauses that will help offset some of that. Casinos typically don't perform well during recessions, but Vici had 100% rent collection during C19 when most places weren't even allowed to operate. So I'm certainly optimistic that they can survive some bad times and still pay out those dividends to us. Vici has triple net leases, which means the tenant is basically responsible for everything. That includes repairs, insurance, taxes, maintenance, and they just pay Vici for being able to use their space. The company has executed $29 billion worth of transactions since 2017, so I expect more growth from them in the future. Currently, Vici has a flat dividend yield of 5% and is trading right at its 200-day moving average, even with the news that they were added into the S&P 500 index. I now own 40.47 shares of Vici for $58.28 in dividends for just stashing away my shares of Vici Properties. Alright guys, so that's 5 stocks that I just put $500 into. I put my money into pretty diverse sectors including healthcare, technology, finance, and real estate. I was able to bump my annual dividend income by a pretty good amount. I'll just continue to be dollar cost averaging whether the market is doing good or bad, as I, nor you, nor anybody can predict what exactly the markets will do in the short term, but what I can control is buying some great companies with a history of dividend payments. So I hope I put these stocks on your radar. Make sure you do your own financial research and see if they'll be a good fit for you as well. As you hit that like button and make sure you're subscribed, let me know in the comments what stocks have you been buying in the comments below. And as always, my videos are found in podcast form under the Collect Cash podcast name, and I will buy, stash, and collect cash you later.